Gold, the eternal refuge, is standing at the edge of its next great test. After the brutal 6% collapse on October 21st, traders are asking one question: what happens next? Right now, gold trades near $4,070 an ounce, caught between fear and faith. The short-term charts are wounded. On the 4-hour view, gold sits beneath the Ichimoku cloud, beneath its conversion and baselines, a picture of exhaustion. Volume is heavy, momentum is negative, and the market is still bleeding off leverage. But step back to the daily and weekly charts, and the story changes. The long-term uptrend is intact. The weekly cloud is thick and green. The monthly chart, though overextended, is still in a super trend. In plain language, gold has bent, but it hasn't broken. Over the next 30 days, the market will likely settle into a neutral to bullish phase. The 4,000 level is now the front line. Lose it, and the bulls retreat to 3,800. Hold it, and the next climb toward 4,250, even 4,300, becomes the base case. Here's the logic. The crash wiped out speculative longs, resetting the field. Real yields are still high, yes, but stable. The dollar is strong, but not surging. Inflation data and the Federal Reserve meeting at the end of the month are the catalysts that will decide the path. If the Fed sounds dovish, if inflation reignites, gold could rip higher again fast. If yields climb and the dollar squeezes, the metal could slip another $200 before finding footing. So the base forecast? A month of consolidation between 3,980 and 4,300. The bulls defend the 4,000 line. The bears wait for it to snap. Momentum traders stand aside, waiting for the daily close above 4164 to confirm a reversal. In the bullish extension, gold reclaims the cloud. Volume surges on green candles and momentum flips. The target then stretches toward 4,400, maybe 45. That requires weaker data, softer yields, and a Fed hinting at cuts, a perfect recipe for another fear trade. In the bearish continuation, that same 4,000 support gives way. Once it breaks, stop orders trigger, and the slide accelerates toward 3,800, maybe even 3,600. That would need a resurgent dollar, strong U.S. data, and the Fed reaffirming higher for longer. Between those extremes lies the most likely path: digestion, not destruction. A market purging its excess before deciding which story to believe again. The short-term indicators, RSI near 35 on the 4-hour and mid-50s on the daily, suggest gold still has room to stabilize before any real push. MACD momentum is negative but slowing. The histogram shows the selling force is fading. So here's the play. Respect the 4,000 line. Above it, the structure remains bullish. Below it, the correction deepens. Until the daily chart closes back above 4164, rallies are suspect. But every dip that holds that key support is a reload opportunity for the next leg higher. The truth? Gold hasn't lost its shine. It's simply cooling the euphoria that burned too hot. The next 30 days won't be about new highs. They'll be about rebuilding trust in the trend. If gold holds firm above 4,000, the next wave will target 4,300 by mid-November. If not, brace for a retest of 3,800 before the bull cycle resumes. Either way, this isn't over. This is the intermission before Act 2, the moment the market decides whether gold remains the king of safety or becomes just another story of overconfidence. So remember this: the crash wasn't the end. It was the reset. And resets in gold often mark the beginning of the next ascent.